Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Well, after several extensions, the income tax return filing deadline is finally here. Yes, it is 31st of December. And the year is also coming to an end. So we thought, why not get you a quick and easy checklist, just in case you've not done your ITR return filing just yet. And of course, look back at some of the biggest direct tax events of the year, and more importantly, looking ahead at 2022, talk about what would be on the personal finance tax wish list as we start talking about Budget 22. Well, to do all of this and more, we have with us Vikas Vasal, who is the National Managing Partner Tax at Grant Thornton. Vikas, thank you very much for joining in. You know, it is that time of the year, no matter how many deadline extensions happen, but people are, typically scampering around right till the last moment. But to be honest, this time around, there was a lot of talk about the portal not working and, the uploads not going through. So first things first, has a lot of that settled? What have you been hearing in the tax circles?
So you're right, Surabhi. There have been some challenges when the new portal started, and that is generally the case when a new system is set up for such a large scale of users. But large part of the issues have been resolved. People are getting the relevant information by going to the portal, and whatever teething in issues we had in the past, or we still have some of those, I think all those will get resolved. But people should go ahead and file their tax returns now. In fact, the tax department is also sending regular messages to the taxpayers that don't wait for the last date of the return filing. Please come ahead and file the returns. So it's working now.
Okay, that's good to know. After several glitches, we're off the ground, it seems. So let's start with question 101, because before we talk about some of the larger issues on personal taxation, for anybody who has not yet done their income tax return filing, where does one begin, and what should be a checklist? What are the main things to keep in mind as you go ahead and file your return?
I think to begin with, Surabhi, one needs to collate all the information, which includes the salary certificate of the Form 16. Then look at what other incomes you have, and two good sources for that are one is obviously your bank statements, the credits into that, as well as the debits from that. And other is the information available from the government side itself, Form 26AS, which contains information about the TDS being deducted and deposited, and a new form which has come up, which is AIS. So all this information should be looked into. That is one step. Second is one needs to make a choice whether one wants to follow the old tax regime or the new tax regime. And that choice is available irrespective, even if the employer has taken a particular stand and followed one of the processes based on the recommendation made by the employer at the beginning of the year. Now, which tax regime to follow, either the old one or the new one, that's an individual's personal choice depending on the facts and circumstances. For example, if somebody wants to claim certain tax benefits which are there in the old regime, one should continue with that. If one doesn't have those benefits to be claimed or hasn't incurred that expenditure or made those investments, then one can go for the new tax regime. Besides these, there are certain disclosure requirements required for certain set of residents. For example, if you own certain set of foreign assets or foreign bank accounts, all those also need to be disclosed. And last but not the least, make sure that your PAN, Aadhaar number are linked and you're filing the correct details of your bank account just in case you want to claim certain refunds. So this is a broad checklist on what one should look at.
Okay, two quick follow-up points, things I just remembered hearing you. One, this is really important because you're saying that the choice between the old regime and the new regime, you can make it for the previous fiscal FY21 for which you are filing the return. You can make it even now while filing the ITR?
Absolutely. If for certain reasons you feel that the choice was not correct, for whatever reasons, you can make that choice now. But that will be applicable in few set of cases only, because largely you would have decided at the beginning of the year what kind of investments you are likely to make or expenditures you are likely to make for claiming the exemption. But yes, that choice is available for you.
Okay, because the other thing you said, this annual income statement, explain this to us, because till now, Form 26AS was the holy grail. That was the form that typically collated everything, told us, where all interest has been credited and how much tax has been deposited, and we could sort of calculate our residual liability. I know I used to do that all the time. So now what is this annual income statement, and how is AIS different from your Form 26AS?
Yeah. So AIS is an attempt by the government to collate information in respect of the various transactions that people have done, especially the financial transactions during the last fiscal year or the financial year. It covers the various information, for example, your capital gains on various security transactions that you do, your dividend income, any sale and purchase of other assets which you have done during the last year. Broadly, the idea is twofold. From the tax department's perspective, it is to bring in more transparency and have more information right from different sources which they obtain, whether it is banks, financial institutions, stock markets, property registrars, etc. At the same time, the idea is for the common taxpayer to have all the information available with them in order to help them in terms of their income filing requirements. Having said that, I would also like to caution the taxpayers, especially your viewers right now who are going to file their tax return, make sure that you have taken into account the information which is there in the AIS, and if you discover any discrepancy in the same, then do file a rectification or an application with the department online itself in order to correct that. Having said that, match your own TDS certificates with the AIS and 26AS while you're filing your return. And as we go in the near future, AIS is going to become a very important tool for the tax department, because they will know what kind of transactions you have undertaken, what kind of taxes you have paid. Now this is the first year, Surbhi, when this has been implemented, so I'm expecting certain teething in issues over there. But having said that, this will be one form which will provide you all the information about your income and taxes in near future.
Okay, so AIS, the annual information statement, that becomes our big go-to document to tabulate all kinds of financial transactions and then pay tax accordingly and file the return accordingly. Got that. Vikas, let's move on to the all-important question of refunds. In fact, I was just looking at some of the data, and let me actually quote the number, if I got that right, that apparently refunds to the tune of 1,36,000 crores have been issued by the department so far in this fiscal. So that gives us hope, anybody who might have refunds. But what do you do to ensure that these refunds are credited? And more importantly, is there any offset available? Let's say I have additional tax liability that needs to be paid over and above the TDS cut by my employer, but I also have refunds pending. Can I do an offset? Is it as simple as that?
So I think a couple of questions you have raised, all very valid. First, yes, to give credit where it is due, government and the tax department deserves a lot of credit and kudos that they have speeded up the refund process over the last few years. And unlike in the past when it used to take years, the refunds are being granted very swiftly, especially to the salaried taxpayers. So that is a very positive step. Second, in terms of making sure that you get the refund in time, make sure that one should file the tax return with complete disclosures in terms of the bank accounts, PAN, Aadhaar, and matching the TDS liabilities that we just discussed in the previous questions, to make sure that you can get the refund in time. Now your question in terms of whether you can adjust the tax refund for 1 year vis-a-vis tax liability for the other year, the answer is no. For example, if you have a refund coming for the last year and this year you have to pay certain taxes, these cannot be adjusted for the simple reason that as per the income tax statute, each of the tax years is considered as a separate tax year. So I know it is not a very welcome thing, but that's how the tax statute stands, that even if you have a refund for the last year and you have a tax liability for this year, it cannot be adjusted. You have to pay taxes for this year and wait for the refund to come for the last year. Now, Surbhi, this has been a pending demand for long, but for various reasons, the government has not considered it as yet in order to adjust, and they have their own rightful reasons for that. to cut the long story short, no, you cannot adjust the refund for 1 year vis-a-vis the tax liability for the other year.
Okay, fair enough. I was just checking just in case. But I guess there is a merit in keeping the financial year separate. So your tax payouts plus whatever refunds, it's all done on a fiscal year to fiscal year basis. The conversation will continue. We do have to take a very, very quick break. Vikas will stay on, and lots of other questions pertaining to your personal taxation and the returns that we all need to file by the 31st of December.